Welcome to the Blockchain VC, a podcast about crypto and the digital assets ecosystem. My name is Tomer Federman, and I'm the managing partner at Federman Capital. We invest in the most promising blockchain startups across the globe. I have more than 15 years of experience in tech, and before starting the fund, I was on the product side at Facebook, where I led product strategy and global growth of some of Facebook's major ad products. Previously, I also lived in Silicon Valley for a few years, where I attended Stanford Business School. You can find me on Twitter at Tomer Federman. Before we begin, please note that this podcast is for informational purposes only, and all the opinions expressed on this show, either by guests or me, do not reflect the opinions of Federman Capital. Nothing on the Blockchain VC podcast represents an investment or financial advice. Please do your own research. Also, if you like this episode of the Blockchain VC and want to help us bring more awareness to the space, I'd really appreciate it if you can rate, review, and subscribe to our podcast. This only takes a few seconds and helps us get the word out. Okay, let's do this. My guest today is Lex Sokolin, Global Fintech Co-Head at ConsenSys. Lex, welcome to the show.
Wonderful to be here. Thank you so much for having me.
Yeah, of course. Before we begin, would love to hear more about your background and why you decided to join ConsenSys.
Sure. So my background is a combination of the accountant and the banker and the artist and a hacker. So I've done both of those hats. I spent a bunch of time on Wall Street doing strategy for companies like Lehman, Barclays, and Deutsche. Lehman was my first exit, my first successful exit to Barclays. And then I started in fintech entrepreneurship early 2009, building out a robo-advisor in New York. And that's kind of what the neobanks are to the UK today, and spent about 6 years building a company automating sort of the distribution layer of financial services products. Out of that, you get the scar tissue of being an entrepreneur, and there's a moment to really think about what's next, and what are the transformative technologies that people are using and what vertical industries they're using them in. And so I spent a few years doing deep dive research with a practice I founded called Autonomous Next. I'm sure a few folks in the crypto world have seen those reports, and got really engaged and fell in love with the concept of smart contracts and token offerings and the microeconomics inherent within token-based networks. Autonomous Next underwent an M&A transaction last year. And so I took the opportunity to look at who's doing, I think, some of the coolest stuff at scale. So at a footprint that could move both the frontier as well as the incumbent industry, can change and challenge and transform what large institutions are doing today. There's only one place that marries both of those vectors. There's only one place that I'm aware of that would work on a global trade consortia or with the world's largest investment banks on one end to tokenize their activities, and on the other hand have best-in-class thinking and exposure to DeFi protocols, and that place is ConsenSys. So I joined to focus exactly on that issue and to stand up a number of products that will be rolling out over the coming months.
That's really exciting, and definitely ConsenSys is one of the most important players. I think everyone would agree in the crypto ecosystem. Wondering, were you also focused specifically on Ethereum, which obviously is the focus of ConsenSys, or was it more about the scale and the size of the opportunity at ConsenSys that you found really compelling?
Oh boy, what a hard existential question. I think you gotta, when you think about protocols and networks, you gotta thread the needle. Networks are powerful when they're networks, meaning the more nodes you have, the more value and economic activity accrues into them, the more they're actually meaningful. Having lots of little networks doesn't do a lot of work. And so, in my mind, we're going to have several, and they are going to be interoperable, but they are going to be vertically distinct, and their scale and to some extent incumbency at this point matters. So Ethereum, in terms of, for example, the number of developers, I believe, if you believe Twitter statistics that you see, it's something like 3 times the developers working on Ethereum versus Bitcoin, and that is already, all of that combined is by far more than the other protocols, and this is just an open source. And then when you look at the world of traditional institutions, and I can kind of motivate why I still think that's an important part to focus on. When you look at the world of traditional financial institutions, there's only one solution at all they're thinking about that is a public chain or that is connected to a public chain, and that's Ethereum. There's nothing else. So for me, it was an easy choice. If you're motivated by the promise of programmable money and smart contract based financial manufacturers and kind of all the stuff that's motivating the DeFi evolution, it was hard to find another location that has the same impact.
That makes a lot of sense. I think the exciting part about the Ethereum ecosystem is exactly what you just mentioned, right? I mean, there's so much development happening on top of the protocol. And I think, clearly, at least now, it's the clear leader in terms of developer activity.
I mean, think about, sorry to interrupt, is just if you think about the competitive advantage of bringing an Ethereum-based software platform to any incumbent or to any investment manager or to any bank. I mean, not only do you get all of the benefits of blockchain out of the box around, scarcity and authenticity and all of that stuff, but you also get thousands of open source developers constantly working on your behalf to make the thing that you're going to use better. There's no fintech provider that gets that externality otherwise. And then number two is you have either hundreds of millions or billions of dollars being spent across the world to secure the system. And again, that's just, you get that for free. So I think it's just really compelling.
Yeah, no doubt. Must be a super exciting place to be at. And what exactly does a global fintech co-head mean at ConsenSys? What are you focusing on specifically?
So we'll be packaging up and announcing the brand and the initiatives in the coming months, but I can share the general outlines of the focus. And I think folks and your listeners know that ConsenSys has been engaged in a whole set of different fintech adventure. Very many adventures and science projects and investments and projects and spokes. But if you narrow it down, there are a number of financial services related activities. And so you can think of them along the maturity curve or like the risk curve of crypto development. So we have I'll start with the most conservative. So at the most conservative end, we help financial institutions and large trade finance bodies and that kind of player think about launching private or public permissioned consortia on blockchains that we deploy for them. And of course, the benefit of going onto mainnet as an adjacent thing is always there. So that's number one. Number two is going a little bit more risk seeking is digital assets and everything that's involved in that. So both in terms of providing platforms and software to launch digital securities or to digitize real estate interests. We just did this in France, or to help build digital asset exchanges, which we just did in Singapore. So again, that's a somewhat conservative theme in the sense that you're taking securities and wrapping them in a token format, but how to do it well, to do it in a locally aware regulatory sort of overlay, all that stuff is another set of initiatives and things that we do. And then if you step up your risk tolerance a little bit more, we still support the launch of utility tokens or exchange tokens, depending on kind of who you're listening to in terms of your classification. And specifically, not just the launch, but what we're excited about is engagement and use. So everything around staking, governance, voting, the interplay between the tokens themselves. We're working on kind of a coherent packaging of how these things fit together. And then number 4, if you maximize your risk seeking for the crypto ecosystem, it gets us into the DeFi protocols and the manufacturing of financial instruments through decentralized autonomous organizations. And again, that's an area where we're building both engines as well as some consumer interfaces that people will be able to use shortly.
And do you have a dedicated team working on that, Lex?
Yeah, absolutely. This is an existential, meaningful industry bet for us, and so we've got a number of teams that are working along the different features that I talked about, and we also spent a lot of time thinking about how to cross-pollinate these different parts of the crypto maturity curve, because the things that we see on the edge of DeFi are the things that we'd love to figure out how to integrate into the more traditional finance system, and then vice versa, the sort of enterprise-ready production quality software that we have to deploy on the enterprise side is the type of infrastructure that we'd want to bring to the startup side of the equation.
Got it. And do you still? I know there's been Joe Lubin, the founder of ConsenSys, I think announced earlier this year, ConsenSys 2.0. Would love to hear more about maybe how your model has changed or evolved as a result. Are you still incubating these many startup teams working on crypto projects, financing them, providing them support, and then hoping to see that grow over time? Or how has the model, I guess, changed?
Sure. So I can't, all that stuff is in flight, and I can't quite lay it out, but I'd say not, the way ConsenSys looks today, not much has shifted. I think we're really excited about the entrepreneurial energy in the space and continue to back companies that are promising and value additive to the Ethereum ecosystem. And that is at the DNA of ConsenSys and not going to go away, and continues to be very important. I think what is fair to kind of impute from our conversation is that we recognize that it's super important to have industry traction, and that where the entire crypto ecosystem has gone, is primarily trading activity. So thinking around crypto assets as trading assets, and then building derivatives on them, and building exchanges around that, and then building custody for all the stuff, and figuring out how to put it into a pie chart. And while that is great for generating interest in the asset class, which is very unique from a finance perspective, like most people don't find themselves engaged or interested in the financial products they hold. That is separate and unique for crypto assets. So I think it's good in that regard. But we also recognize that for for all of us to still be here in 5 years, focused on what we're doing and not seem like we're in a separate world, but are moving the economy forward and really integrating these solutions into how people live every single day, and not just from a finance asset perspective. In order to do that, to get that done, we need to have kind of operating traction with customers of all sorts of types, whether those customers are real human beings that are using blockchain-based phones with crypto assets and engaging with them and interacting with them on a meaningful daily basis the same way they would with an app, or if those customers are small businesses, or if those customers are the large providers of services to the small businesses. So you need to develop the entire value chain. And so what we recognize is that financial services as an industry is where we've seen the most progress, both for crypto as a whole, for crypto assets as a whole, and then more specifically within Ethereum, designing machines that manufacture financial instruments is a strength of Ethereum. And whether those financial instruments are security equivalents from the ICO boom, or whether they are lending equivalents from the DeFi movement, or whether they are venture capital equivalents from the DAO blow up, or whether they're crypto payments and kind of payment processors, all of those things are being built and developed. And so we do have a strong point of view that there is a financial services overlay.
I think you sit in a very unique place, right? Where you have exposure to so many great teams and working on different verticals within the crypto space. Wondering from your perspective, what are the main challenges to get to mass adoption of crypto? And I think we all recognize the relatively few of us that are involved in the space right now, that there's a massive opportunity ahead, and many of us are super excited about what's to come. But the data indicates that certainly on the DApp front, right, like usage is relatively low. The vast majority of the public still hasn't purchased crypto. Maybe they've heard about Bitcoin or Ethereum, but they haven't really engaged or purchased it. How do we transition, in your mind, from where we are now to mass adoption of cryptocurrency and blockchain technology in general?
That's a great question. It's I think about that question. I would answer that question differently depending on what hat I had on. So I'll give you like my prior answer from the research perspective, and the answer there was all my intuition was around phones and hardware devices, and then the apps on those phones. So if everybody has a Samsung or a Huawei phone, and I'm just going to go into Asia immediately, just because that's where I see that stuff happening more quickly. So if everyone's got a Samsung that is also a wallet, and you are when you open up Samsung Pay, for example, there's no difference between a Visa credit card, a Bitcoin, DAI, or any other crypto asset, and everything else is abstracted away. From a user experience, to me, that's the baseline. So by analogy, you can kind of think about Real Player in 2002. Do you remember Real Player? Did you using it at all?
Yeah, unfortunately, I do.
So it's the worst experience. It's always buffering. It downloads videos that are grainy to your computer, and it's full of ads and spyware, and
Right.
It's dead. It should be dead, and it is dead. But of course, they were 100% correct about where the internet was going, which is video, right? So now you look at YouTube, you look at Twitch, you look at Snap and Instagram, and everything is video. So they weren't wrong. They didn't have the rails to deliver video in 4K over broadband. There wasn't even standards in the browser. It was all Flash. So I think a lot of the user experience today is Real Player, which is just not going to be mass adopted until you get to a YouTube quality. Like until it's as easy as using YouTube, you're not going to get there. And then number two, the thing to think about why YouTube succeeded is it wasn't just a Flash video player, it was all the pirated content on it.
Mm-hmm.
And just to be explicit about it, the reason people adopted in large part the iPod is that they had a whole bunch of Napstered MP3s on their computer, and the iPod was a place to put it. The reason YouTube won out is because it had content you could stream, and it was already benefiting from things that normal people wanted to see.
Mm-hmm.
The reason Google grew so well is because content went from behind media walls on paper to everything's now just on the internet and free, and Google is how you find it and access it. So you need that body of content for people to engage with. And so when you move to the finance world, you need to bootstrap both sides of that. Number one is you need the easy user experience, which I am seeing how that is developing, but I don't think we've converged on the winner yet. I mean,
Mm-hmm.
Coinbase and Binance have some of that for sure, but they are still so capital markets and trading focused that I think there is a distance to travel. And then number two is you need something that people actually want to engage with. You need like that set of content that you want to see. And it's tough in finance. And the example I go to is Mike Cagney's Figure, which is Mike Cagney is a founder of SoFi. He got kicked out of SoFi, and his next startup is called Figure, and it's a home equity loan. So you own a house. You are approaching retirement. Of course, you haven't saved enough because that's how it is now in the world. People don't have money when they approach retirement. So what you do is you take out money from the equity of your house. So this is a real human need. It is a human need that is repeatable and has a giant market and happens all the time. And traditionally, banks focus on this need. Digital lenders have an opportunity to fight the banks and be smarter about the actual credit underwriting. And Mike's got experience doing that through SoFi, and this is a new digital lending vertical. And so for Figure, which is the startup that does this, all the underlying stuff around the home equity loan is happening on a proprietary private chain instead of a spreadsheet or a database or a bunch of paper. And so if you're approaching this from sort of a religious point of view, and you say, only public chains, only Bitcoin, and maybe Ether and whoever else is allowed in your portfolio, only these public chains are the real deal, then Figure doesn't make any sense. But if you look at the fact that Figure is going to be underwriting more than Maker has locked in it, and is actually taking economics out of that and is self-sustaining, then it makes you think. It makes you think about what people are actually going to buy and how they use it. So those are the types of things that I'm excited about, of finding real customer need for products that people use every day, and then abstracting away the complexity underneath.
Mm-hmm. Yeah, absolutely. Do you see that more in evolution, I guess, of the traditional financial system that we have right now, rather than, a whole new way of exchanging value and transacting? Or I just wonder if, you think this is something completely new, or more like the example you just gave, which I tend to think is more in line of, just an evolution of what we already have and do.
I think it gives humans too much credit to say, to describe. I think it's rhetorical flourish to describe something as, you know, so new and different that we've never had it before, and it's gonna kill everything prior to it, especially around finance. And that's not. So let's just take electricity, right? I think blockchain is like electricity. I think it's a step function in human technology and capability. I think nothing from a software perspective was like it before. And I think it opens up a whole blue ocean of things we can build and power up. that were just not available, right? So derivatives on derivatives, collateral, triple collateralized and moved around in near real time on DeFi protocols, not available to us before on old infrastructure. And I think 5 to 10 years from now, that will be even more clear. But if you look at electricity, like think about a laundromat in 1920. Like a laundromat powered by electricity is amazing. It's a robot that washes your clothes, and for thousands of years before, not available to human beings. But at the same time, everybody had always needed to wash their clothes. And you look at peer-to-peer exchanges or peer-to-peer lending, and you say, never before have we had the ability to do with financial instruments what we do now and build order books in real time and dissolve them and all this stuff. And yet, people have traded since people were able to have language and talk and form communities. So I think blockchain just lets us do more of who we are. And we need to, in order to make it kind of integrated into our everyday life, we need to do the hat trick of both innovating on the consumer side and getting people who are early adopters to use the cool tools. And then we need to forcefully push it and sell it into the more conservative side of the market, because that is 99.9% of the assets and customers. So we need to catalyze that.
Yeah, makes sense. I guess the way I think about it is, it's probably both, right? There's a natural evolution that's going to happen and is already happening, but at the same time, I do think it also creates some completely new opportunities that just never existed before, right? When you can, move $1 billion in 1 second for like 2 cents, and at the same time, you can wire money across borders for basically free. There's just so many new use cases that probably never existed before, because I could never send you, 5 cents, right? The transaction would cost more using legacy financial services.
Yeah, absolutely. I mean, I think to some of the things from when I was younger that appeared, really scarce and hard and impossible, and it's you see something on TV that you really like, and you're like, I'm never going to see that before again. Or you hear music you like on the radio, you hear a song, and it's just, I got to record that off the radio on a cassette. It's gone forever, right? And that's nonsense today. Or if you think about long distance calling, like if you move from one country, so I immigrated to the US from Russia, and now I live in London. And so, long distance calling your relatives or writing letters, because you'll never see those relatives again. And it is trivial right now to boot up video and see your relatives in any time zone you want. And money is exactly the same. Like you say, what used to be super difficult in the past, moving $1 billion across 4 jurisdictions, you can snap your finger and just get it done. And the faster we get to people thinking that's the default, and that it's really even just boring to consider that it's like, of course, that is the texture of our universe, the better off we'll all be.
Yeah, absolutely. And one more question on that before we move on to my next question. So, there's obviously a lot of talk about Libra, Facebook's blockchain project. And my question is related to what we just talked about. How likely is it in your mind, or how do you think about innovation coming from established traditional tech and finance companies versus, native new blockchain startups, right? And Libra is one example. Another is Apple rolling out their credit card just now. How likely do you think they will succeed kind of in this new world of blockchain, as opposed to these new startups like Mike's example that you gave earlier?
I think that's a question with a lot of granularity to the answer behind it. And so to bubble up the truth, I would say um, I do think that something has changed in the nature of corporate competition, where and it's different case by case. So I think for any industry you have to think about the distribution of the quality of the companies. So there's going to be power laws that accrue a lot of clients and leadership to a few oligopoly players at the top, and then you're going to have middle players, and then you'll have a long tail. And that's true for all the for finance, and it's true for tech. I think something has changed in the nature of competition more recently, where as companies have become more increasingly software or platform companies, right? You go out of manufacturing product and you go towards user attention. And you see this in the messaging of everybody from Goldman Sachs to the NASDAQ now. Obviously Apple and Amazon and Facebook, but even in more traditional financial incumbents, you see the messaging that they are attention companies, they're tech companies, they're building platforms, whether or not that's true. And the nature of competition is that it used to be the bigger you get, the worse things are for you. The bigger you get, the slower you are, the less you see. And startups can nip at your ankles and build things around you. And now I think for the large tech companies, there are increasing returns to scale. So you get more data, you can hire better AI PhDs, you can run more experiments because you now have sort of lean startup or agile, or the scientific method is applied within corporations. So I think for a lot of the AI tech company, and then by the way, you can also impact regulation and elect presidents, right? So you do have this return to scale that is that is a little bit worrying. And I think it's different for the finance industry and the tech industry. For the finance industry, there's a much more existential threat where they might not be able to get the right talent in place. They might not understand the technology. They might push against it too much. And especially that's a threat to the middle and the long tail, right? JP Morgan and Goldman, they're going to be fine. Regions and Fifth Third and the rest of the other 10,000 banks in the US and the other 3,000 banks in Europe, those are the ones that are going to feel a crunch from startups who are much faster. On the big company tech side, I feel that that is meaningful competition because they already have the user attention. And so, I wouldn't discount what Apple is able to get done or what Amazon or Facebook are able to get done globally, because it's very hard to pry people out of their platforms and put them into, to convince somebody they shouldn't be using Apple Pay, they should be using MetaMask, even though MetaMask is great. I think you've got to solve a lot of issues with the real world before you can get there.
Yeah, and they have this like massive user base already, right? Like Facebook just turns it on in WhatsApp, and suddenly billions of people can transact using the platform they're already used to.
Which is, yeah. I think if you look at fintech outside of the large tech players, you've got Robinhood and Acorns and Revolut and N26. To some extent, you could say Coinbase is in there and SoFi. And so you've got these vertical product champions that have all raised 200, 500 billion, 2 billion from SoftBank or some other equivalent thereof. And some of those vertical champions will remain. And I think that's also true for the really good crypto companies, is that 1, 2, 3, maybe 10 will make it through and become large established brands. And we already see the foundations for that in place. But it's going to be hard to turn over, and be the next Facebook or be the next Amazon just because you're on a blockchain chassis.
Yeah, you'll probably need to come up with a new business model, right? It's not just going to be Facebook 2.0 or Apple 2.0.
It's certainly not going to be Facebook from 2008. I don't get it. I don't get that approach. Like, let's build a thing that people hate now, but make it red and put tokens in it. I just don't see how that works.
So what are the curious? What are the categories or sectors you're most excited about within crypto? There's been a lot of talk earlier this year. People thought this is going to be the year of the DEX, or there's been a lot of talk about STOs. I've been reading some of your excellent writings, and I know you sounds like you're pretty passionate about fully featured DAOs. Would love to hear more about categories you're most excited about and why.
I think there's a two-step evolution. So, and I'm always interested in the edge personally, and so I think the two-step evolution is we've got a number of different DAOs that manufacture financial product across sector, and they've been tested to some extent over the last 3 years. And so the first step is let's aggregate those into the financial services assistant of the future, right? The equivalent of whatever you get today from one of these vertical fintechs. So a DAO that can lend and that can trade and that can underwrite insurance and underwrite loans, not just based on collateral, but on real life information, and that can do payments and all of those things. So the aggregation of the different Lego pieces and the different protocols. I think it's actually, this is a really hard step. So in traditional finance, it's fairly trivial to do data aggregation. You either ask nicely through APIs or an OFX file, or you brute force it by taking a client username password and just taking the data out. And then you've got mint.com. With DeFi protocols, I think you can certainly integrate all of them into an experience, but they don't all have this, obvious logic. They're not all coherently thought out in terms of the financial product architecture. So you need kind of either curation engines or some sort of human decision process to sit on top and say, this is appropriate for a client or not. And I'm going to put aside the sort of thing of like, caveat emptor, like if, anyone using DeFi should just assume the risk of whatever it is they're interacting with, because end of the day, it's nearly impossible to know what all the risks are, and it's a very technical product. So I think there's the aggregation itself is a hard task, and we see stuff like InstantApp and then other apps moving forward and doing that. But I think there's just way more work to do there. So that's step one. And then step two is traditional products, traditional investment products. So the rest of the world, right? So how do you pull together both your your DeFi lending and your your Walmart loyalty points and your Visa credit card, and then your student loans in one place? And how do you optimize between those different financial goals and the constraints they generate? And to me, that's step two, and it's really interesting. And of course, to solve for that, you need to solve a whole host of infrastructure and legal issues underneath. And I think that might take 2 years or that might take 20 years. But on the other side of that process are some really compelling consumer experiences that, I think we're just going to be really we're going to be surprised how powerful those experiences are and how disempowering they are to traditional financial institutions.
So you do think we would still need a human sitting on top of all of these systems just to, or do you see kind of the DAO being fully automated at some point, to the point where it's basically software, and we don't have people involved in necessarily in the governance of some of these projects.
So I'll give you two analogies. So the quick answer to your question is yes, both of those will exist simultaneously. So today you can drive down a road in Pennsylvania and you'll have a self-driving Tesla, and then next to that you'll have a horse and buggy with a couple of Amish people in it, right? So both of those things exist at the same point of time on the same road. The analogies that help me think about it are the engine, for example, for kayak, for comparison shopping, different travel tickets and pricing algorithms. So there's software that the airlines themselves have to optimize the pricing of their ticketing. And then there's the kayak layer, which is comparison shopping, which is optimizing on the behalf of the consumer. It used to all be done by travel agents, and now it's the software algorithm. And there's a 10-year journey from exposing the airline systems and the ticketing and pricing there, to then building Travelocity, which just aggregates it and creates filters, to then building Kayak, which has a data science AI type layer that mixes and matches things to give you kind of a recommendation. And I think in crypto and the DAO land, similarly, like how much human is involved in optimizing what the DAOs manufacture for you against what the human being actually needs. That's a big question mark for me, because people don't buy financial products. It's I think it's a crypto lens that's wrong in my view, that like you put up a finance product and people come and get it because it's got some interest rate or it's got some investment proposition. People don't buy individual products. They solve their goals. Like they want to buy a house, they need a mortgage. They need to invest for retirement, they'll make a pie chart. They're going through a divorce, they'll get an advisor to tell them how to split the assets. That's how people interact with finance. The people who are chasing the individual products are enthusiasts and early adopters, and I'm one of them. But it's a danger to generalize my own point of view to others. So that's kind of one way to think about it. Another way to think about it is the journey that music took. So, we digitized all the MP3s through Napster and distributed them through Napster, and now they're on our iPods. And this is 2002. The next step was Pandora. It wasn't Spotify, it was Pandora. And Pandora recommended to you music you would like based on the attributes of the songs. But the really interesting part that I remember about Pandora is that even though the algo to recommend was kind of, it was a regression, but it was kind of like a machine learning V0, because you could change the regression in real time. But the actual tagging of attributes into the songs, the 50 attributes about genre and beat and all that was done by music master students. So they had like 50 music students in a room, human tagging the stuff for the machine. And that was necessary for 10 years before you got to AI and full automation on music classification, and then you get to Spotify. And I think for DAOs, again, you have the same thing, which is like, yes, you're going to have tons of logic in the protocols themselves, and some will be more automated in their governance structure, and some will be voting based and more human, and both of those will fail in different ways. And we've got that 10-year journey to learn of what is the right mixture of human beings versus automation, and where do you have the human touch, and where do you avail yourself to legal systems in the human world?
Yeah, the regulation aspect of it is pretty tricky in itself, right? How do you regulate a DAO?
Yeah.
And how do you bring, major players, whether it's in finance or in tech, into DAOs? Because typically they would want it to be regulated. So that's just going to be fascinating to see how that evolves.
I don't think these are intractable questions, to be honest with you. I mean, we're doing some work around that, and I've seen others do good work around, thinking through the law and smart contracts. And and the core is, if everything you're doing digital, everything you touch is digital, right? So that means you can't do security tokens because security tokens point to legal contracts in the physical world. But if everything you're doing is digital, then yeah, you can enforce breach and you can enforce other legal requirements and mechanisms like payments or voting. You can enforce all of that through software alone, and you can build the governance into a DAO. And other industries, like just the cotton industry, for example, globally producing the cotton that goes into clothing, use private legal systems and get away with it to the extent that everything they do is within that private legal system. But most of our human activity needs to be enforced in the physical world. So, if we get out of this, if MakerDAO isn't just about collateralized loans where they already have your position, but is actually underwriting something about you. They're taking you're looking at somebody's capacity to pay, and you're saying, okay, based on this, I'll give you a personal loan because I think you'll repay it. Well, then let's say this person doesn't repay it.
Mm-hmm.
Now they're in breach. You got to go into whatever jurisdiction they're in and start finding ways to get your loan repaid. Seize property or put some lien on their income or something, right? Some sort of um, impact on their life outside of the software. But you can moderate that. You can write clauses into smart contracts that decide jurisdictions, that bump these decisions out into the local courts.
Mm-hmm.
And for sure, if you want to bring traditional financial institutions into this stuff, you're going to need to do that. And the way you would package it is actually, you wouldn't call these things DAOs. You would just say, we're going to take your workflows, your regular traditional workflows for underwriting or for, risk tolerance or asset allocation. We're going to take those workflows and business logic and turn them into software. And instead of selling you that software, we're just going to open source it and make it so that you can, query it and ping its APIs and have its processes run for you externally.
Mm-hmm.
And an entire industry could then use this bundle of business logic, which end of the day is a DAO. But to make that something people would use, no question, you need to also build out the legal side of it to be something that they'd accept.
Absolutely. And do you think there's also gonna be innovation coming from places where, maybe traditionally we haven't seen a lot of innovation coming from? One of the things we keep seeing in crypto is more decentralized teams, right? Working from remote locations and so forth. I know at ConsenSys, correct me if I'm wrong, you also have a lot of teams that are decentralized and are comfortable working remotely. As we move to this new DAO world, or however we decide to package that, do you think also teams are going to be more decentralized and distributed in how they work?
So that's an interesting social question. And it goes back to my lame references about being able to call anyone anytime with video, where you see that technology enabling people to work remotely. You wouldn't be able to do that without Zoom or Slack or something like that in place, or GitHub. So yeah, for sure, if you have finance versions of that infrastructure, it's going to be much easier to pay people like contractors, and it's going to be easier to bank people who might not be domiciled in jurisdictions that have good economic or legal systems, but where people are talented and able to do the work that we're talking about. So I do think it will enable a more global and interconnected workforce. Of course, that sets up a fight with sovereigns. So the sovereign that's going to be the most affected is the one that is also the most fragile, right? Like the United States, if some tiny proportion of people are a little bit more remote, nothing's going to change. But if you're talking about small countries with aggressive or poorly defined or corrupt economic systems that are going to start losing their top talent. End of the day, it's going to come down to taxation. So the sort of invisible thing that people aren't talking about is they like DeFi protocols because they don't have to pay capital gains tax on their or they don't have to pay gains on their dividends and stuff like that. I think that's where the fight is going to happen.
Yeah, I just wonder, I guess my point is, do some teams overcome some of these legal obstacles that we just talked about in terms of, regulation of DAOs and so forth by having the team more decentralized or, maybe working remotely out of more friendly, I guess, jurisdictions to some of these new business models?
So I think this is a personal bias, that
Right.
I'll answer the question with. I don't. So there's two ways you can deal with power. You can fight it, or you can figure out a way to work around it or with it. Yeah, and it just depends on your personality. You're welcome to yell in the wind as much as you want. I think the right answer longer term is to be fully compliant and figure out for each jurisdiction where you're working how to do that, and how to be a good participant. And that's what's going to get mainstream adoption. I think the other strategy is like regulatory arbitrage globally, keep moving around on your yacht, and uh, try to not avail yourself to any of the laws. And I think Binance has done a smart job of that. And certainly for many others, it's a strategy of timing, like find the most friendly jurisdiction and go there. Um, from my hat, both personally and from a ConsenSys point of view, I would say that as a global entity, wherever we operate, we have to do that with the highest level of excellence. So the arbitrage doesn't really work long term.
Yeah, that's a fair point. It's gonna be, I think, fascinating to see how that evolves. Regulation is so top of mind for so many of us in the space right now, and it's so hard to predict, how it's gonna play out from a regulatory perspective in some of these
And
jurisdictions.
the regulators I think, understand the context, which is global war for talent and innovation, and that there's a balancing to do between innovation and consumer protection. And the regulators themselves, they're not lawmakers. They're part of the executive branch, so they're trying to enforce the laws that exist. So humans in societies can participate in their political process to enact laws that they want. And so I think you've got to figure out how to transform society more holistically. And I think the regulators are not the enemy, they are an enabler uh, if we collaborate with them in the right way.
Yeah, I totally agree. I think you made a very good point, by the way, about earlier about not selling, or not thinking about necessarily developing financial products and selling them as a standalone solution, but rather, I guess, moving more to the point of sale phase and trying to integrate whatever financial product you're offering as part of the overall offering, which makes a lot of sense and kind of makes me think whether some of the startups that we're seeing should think more about integrating with some existing solutions rather than trying to develop a standalone financial product. I think that's a really great insight.
I think a lot of I wish I was the owner of that insight. I mean, you can point to Max Levchin and Affirm, and that's been his core insight for a while, that credit lives at the point of sale. So when somebody's buying a thing on the internet, maybe give them the option to finance it, and that's the Affirm button. That's the insight behind GreenSky, which is one of the kind of sleeper hits of the American fintech industry. You want to get home improvements. Let's say you need to fix up your kitchen or install a deck, which for Americans is something they do all the time, and instead of going to a bank to get a loan to then go hire a contractor, the new workflow is you call up a contractor that can remodel your kitchen. That home contractor comes with an iPad. The iPad has the GreenSky app on it. So they say, I'll remodel your kitchen. And by the way, we can get this financed through GreenSky, which then intermediates banking, other banks to loan into that transaction. So it's in the real world at the point of sale. So if you're a crypto entrepreneur, like, think less about crypto and think about the stuff that people are buying. So like, find a site that sells kids toys and point of sale kids toy financing using MakerDAO. This is just what's on my mind right now, kids toys and Maker. But there's thousands of these permutations. You got to think about the market, not the product.
Yeah, absolutely. And I think the more we see insights like that and entrepreneurs kind of thinking about the real world use cases of some of the products they're working, the better off we would be as an ecosystem, right? You got to think about the real pain points that you're solving and how to make the experience as frictionless as possible, which obviously there's a lot of room to improve on that in terms of where we are right now as an industry.
There you go. Absolutely.
Great. Thanks so much for coming on, Lex. Really enjoyed the conversation and really appreciate you taking the time to come on the show.
My pleasure. Thanks for having me. For listeners that are interested in more of this type of content, I've got a weekly newsletter called Future of Finance. You can get it through either LinkedIn or I think I link to it in my Twitter, Lex Sokolin. And then keep posted for what ConsenSys is doing around fintech, and I'll be sure to share more news as I have it.
Yeah, and if entrepreneur out there wants to reach out to ConsenSys and look to partner with you or collaborate with you, what's the best way to do that?
Easy. You can send me an email at lexsokolin@consensys.net. Yeah, it's the only company where .net is actually kind of cool. I will say that. We made .net cool. Or you can through LinkedIn or Twitter, you can DM me, and I'm happy to take it that way too.
Great. Thanks so much again, Lex, for coming on. Really enjoyed the conversation.
My pleasure.
Thanks for listening. If you like this episode of The Blockchain VC and want to help us bring more awareness to the space, I'd really appreciate it if you can rate, review, and subscribe to our podcast. This only takes a few seconds and helps us get the word out.